Silver just dropped nearly $2 in a single session. Right now, today, Friday, March 13th, 2026, as of the New York close at 3:55 p.m., silver is sitting at a bid of $82.18 per ounce, down 156 on the day. That's a 1.86% single-day drop. And the market is asking one very loud question right now. Is this a warning sign, or is this the most powerful buying window we've seen all year? Pause for effect. Because here's what's wild. Just weeks ago, silver was pushing past $85. Right now, in real time, it just gave back everything, and then some. If you've been waiting for a moment to pay attention to silver, this is it. Do not touch that screen. Welcome back to Silver Signals, everyone. I'm Yali Jiang, and whether you're joining us for the first time or you've been here since the early days of this channel, I'm genuinely glad you're here today, because today's video might be one of the most practically important ones I've recorded in a long time. We are going to break down exactly what happened today in the silver market, why this dip matters more than it appears on the surface, what history tells us about moments exactly like this one, and, most importantly, what you should actually be doing with this information right now. Pause. Now, before we go any further, if you haven't already subscribed to Silver Signals, please take 3 seconds and do that. I put out real analysis, real data, real talk, no hype, no pump and dump nonsense, and I don't want you to miss what's coming next in this market. Hit that subscribe button and the bell. Let's get into it. So let's start with the numbers, because the numbers today are genuinely fascinating. Right now, silver's bid is $82.18. The ask is $82.43. The day opened with a range between $81.57 on the low end and $85.58 on the high, meaning at some point today, silver touched nearly $86. And then it got absolutely crushed back down to the low 80s. That's a nearly $4 intraday swing. To pause. Think about what that means if you're holding physical silver. 1 gram of silver right now is worth $2.64, down 5 cents on the day. A kilogram is sitting at $2,642, so that's down over $50. A tola, which is a unit many of our friends in South Asia and the Middle East use, is currently at $30.82. A tael, commonly used across East Asian markets, is sitting at $99.87, down $1.90 today. I mention these different units on purpose because silver is a truly global market. Whether you're watching from New York or New Delhi, from Dubai or Durban, today's move affected you. Now here's the question that really matters, and I want you to think about this carefully before I give you my answer. When silver drops nearly 2% in a single day, is that bad news or is that an opportunity knocking on your door? Pause for effect. Most retail investors, the ones who check prices once a week, maybe follow a couple of headlines, they see a red day and they feel fear. And fear makes people do one of two things. Either they panic sell or they freeze and do nothing. Both of those are usually wrong. I've been tracking silver closely for years, and I want to tell you something that the mainstream financial media almost never says out loud. Dips in precious metals, especially sharp intraday dips like today's, are very frequently the entry points that serious, long-term investors look for. Very frequently. Not always, and I'll tell you when they're not in a moment, but very, very frequently. Let me put today's price in context for you, because context is everything in this game. At $82 per ounce, silver is still trading at a historically elevated level compared to where it was just 2 or 3 years ago. But here's the thing that most people miss. Silver has a dual identity that makes it unlike almost any other asset in the world. On one hand, it behaves like a precious metal, like gold's scrappier, more volatile younger sibling. It responds to inflation fears, to currency weakness, to geopolitical tension, to central bank policy. On the other hand, silver is an industrial metal. It goes into solar panels. It goes into electric vehicle components. It goes into semiconductors and medical devices. It is physically embedded in the green energy transition that the entire planet is in the middle of right now. Pause. Gold doesn't do that. Gold just sits there being gold. Silver is working. It's in factories, it's in labs, it's in the satellites orbiting above your head right now. And that dual demand structure, investment demand pulling it one way, industrial demand pulling it another, is exactly why silver's price story over the next decade could be something truly historic. Now, I want to bring up something that I think deserves more attention than it gets, and this is where it gets really interesting. There's a metric called the gold to silver ratio. It tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere between 40 and 60 over long time periods, meaning gold is typically worth about 40 to 60 times what silver is worth. Right now, with gold trading significantly higher, that ratio is considerably above the historical average. Pause. What does that mean? Historically, when this ratio gets stretched too far, when silver is deeply undervalued relative to gold, it tends to mean revert. Silver closes the gap. It doesn't always happen fast. It doesn't always happen in a straight line, but the gravitational pull towards that historical average is real. And it has played out over and over again across market cycles going back decades. A day like today, where silver drops and that ratio stretches even further, is actually, from a historical perspective, adding fuel to an already loaded spring. And I'm curious, I genuinely want to know what you think right now. Drop a comment below and tell me, are you seeing today's dip as a buying opportunity, or does this kind of volatility make you nervous about silver? I read every single comment on this channel, and I learn as much from your perspectives as you hopefully do from mine. So please, take 30 seconds and share your thoughts down below. There are people watching this video right now who are making real decisions about their money, and your comment might actually help someone think through this more clearly. That's what this community is about. Now let me talk about something that I think gets completely overlooked when people analyze silver dips, and that is the supply side of this equation. Most people look at silver purely from the demand side. They think about investors buying coins and bars, or industrial buyers purchasing silver for manufacturing. But the supply picture is something you need to understand if you want to really grasp why silver is structurally interesting right now. Silver is not primarily mined on its own. About 70% of silver produced globally comes as a byproduct of mining other metals: copper, zinc, lead, gold. That means silver supply is not entirely responsive to silver's price. When silver prices rise, mining companies cannot simply ramp up silver production overnight the way they might with other commodities. The supply response is slow, constrained, and often limited by what's happening in entirely different metal markets. Pause. So you have a situation where demand, from both investors and industry, can move quickly and dramatically, while supply grinds along on its own schedule. That structural imbalance is one of the most compelling long-term arguments for silver that exists. And a single volatile day like today doesn't change that equation one bit. Let me also talk honestly about risk, because any channel that only tells you the bullish case for silver without acknowledging the risks is doing you a disservice. Silver is volatile. Let me say that again. Silver is volatile. Today proved that. An intraday range of nearly $4 is not unusual for silver. It can be nerve-wracking if you're not prepared for it psychologically. Silver can and does go through extended periods of price decline. It can consolidate for months, even years, before making a significant move. If you need your money in the next 6 months, silver is probably not where you should be putting it right now. The precious metals market rewards patience, and it punishes impatience more severely than almost any other asset class. So please, any decision you make based on this video or anything else you watch, make sure it aligns with your own financial situation, your own time horizon, and your own risk tolerance. I am not your financial advisor. I am someone who is deeply passionate about this market and committed to giving you the most honest analysis I can. But you have to make your own call. Now, and this is the part I've been building toward, so I really hope you're still with me. Here is the insight that I think most people watching today's silver price action are completely missing. Pause for effect. Ready? Today is Friday, March 13th, Friday the 13th, and silver dropped on a Friday afternoon going into a weekend. Let me explain why that matters. Institutional traders, the big players, the hedge funds, the commodity desks at major banks, they frequently use Friday afternoons to unwind positions, to reduce exposure before the weekend, to take profits on trades that have been running. They don't want to hold large leverage positions over 2 days when the market is closed and anything could happen. So what you sometimes see on Friday afternoons in the metals market is selling pressure that is not necessarily driven by a fundamental change in the outlook for silver. It's driven by portfolio management, by risk reduction, by mechanics. And when Monday comes and the dust settles and the real buyers come back to the market, sometimes, not always, but sometimes, the price recovers. Pause. Now, I want you to connect this back to where we started. We opened this video with a shocking fact. Silver just dropped $1.56 in a single session, sitting at 82 or 18 dollars. And I asked you, is this a warning sign or an opportunity? Here's my honest read. When a high-quality asset drops on a Friday afternoon due to institutional position unwinding, and the underlying fundamentals, dual demand, supply constraints, stretched gold-silver ratio, green energy tailwinds, are all still firmly intact. That, historically, has looked more like an opportunity than a warning. That is the pattern that has rewarded patient, informed investors in this market again and again. I want to leave you with this thought before we wrap up. Wealth is not built in the moments when everything is going up and everyone is excited and the news is great. Wealth is built in the quiet, uncomfortable, uncertain moments, when prices dip and the crowd is nervous and most people look away. The investors who are going to look back on this decade and feel genuinely proud of the decisions they made, They are the ones who did their research, who understood why they owned what they owned, who didn't panic when a Friday afternoon moved the price against them. Silver at $82 with all of the structural tailwinds that exist behind it right now, the energy transition, the industrial demand, the monetary uncertainty, the historically wide gold-silver ratio. That is a very different story than silver at $82 with none of those tailwinds. Context is everything. And now you have it. All right, friends, let's bring this home. Today, Friday, March 13th, 2026, silver took a hit. It dropped to $82.18, down nearly 2% on the day. Intraday, it swung nearly $4 from high to low. It shook a lot of people. But when you zoom out, when you understand the dual nature of silver, the supply constraints, the industrial megatrends, the historical patterns around the gold-silver ratio, and the mechanical reasons why Friday afternoon selling happens, the picture looks very different from the headline. It looks to me like an asset that is consolidating before its next chapter. Now, I could be wrong. Markets are never certain, but I'd rather be wrong having done my homework than right by accident. And I'd rather you make your decisions with a full understanding of what's actually going on, than react out of fear or excitement. If this video gave you value today, if it helped you see the market more clearly, if it gave you something to think about, please give it a thumbs up. It genuinely helps this channel reach more people who are trying to make sense of their money in a complicated world. And it means more to me than you probably realize. And if you haven't subscribed yet, please do it now, because what's coming in the silver market over the next few months is going to be worth watching closely. And I don't want you to miss a single update. We cover silver, gold, market trends, and real wealth building strategies right here on Silver Signals. And we do it honestly, without the noise. I'm Yali Jiang. Thank you for spending 20 minutes with me today. Stay patient, stay informed, and I'll see you in the next one.